Angel is brought to you by NetSuite from Oracle, the only system you need to run your business. Go to netsuite.com/angel to get your free guide called Crushing the 5 Barriers to Growth.
Hey, everybody. Welcome to another episode of Angel, the podcast, where we talk to angel investors who are investing in the next crop of great startups. My guest today is Arlan Hamilton, and she is with Backstage Capital. And we've had a little bit of a controversy in our industry about the number of women who are investing, and specifically women of color. There are very few. Count them on one hand. And jumping into it and mansplaining it on Twitter at some point in my career, which I'm known to do sometimes, I said, women should just start their own funds, because I don't get the sense, being in the industry, that women are going to, by applying to venture capital firms, have great success. I think these venture firms are very slow to add new partners. It takes them typically one new partner every 4 or 5 years. The quicker route to balance things out would be to start your own funds. And certainly there's enough powerful women with large sums of capital to make this happen. Well, interestingly, my guest today did it without a bunch of powerful backers or her own huge bankroll. Mm-hmm. So welcome to the show, Arlan Hamilton.
Thank you, Jason.
So tell me, how did you get the idea that you wanted to be an investor in startups?
That's the question. So I was working in the music industry and working in as a production coordinator for musicians off and on when I could get the work, which was really fun. And I started noticing different people that were in the entertainment business, or managers of those people, like Ellen, for instance, or Troy Carter, who managed Lady Gaga, or Ashton, of course. Yeah. And I started noticing that they were doing these investments.
They were dabbling.
Yeah, exactly. I saw it just as an observer. And I got curious as to what would drive them to go away from something that I thought was so exciting, like the entertainment industry itself.
What could be more exciting than that?
They're titans in their field, and they were hopping on a plane every month to go drop $50,000 on a 2-person team. Yeah, it made me really curious. So I started doing research there, which led me to kind of stumble upon a lot of different startups, and from all different types of founders. And anytime that I saw one that I was excited about, I just would get in touch with them. I was living in Houston at the time, and I would get in touch with them and just ask them, can I help you in some way? Can I do some little task or work with on some project? And that turned into like reading every book I could read and listening to every blog. Listening to every podcast, every video series. And I actually saw an episode with you and Chris Sacca. Yeah. Very early on. I watched the whole thing.
It was a 2-parter.
Right,
like 3 hours of Chris Sacca.
Right. And I remember that it caused someone to get a gig at Uber who had watched that or something like that.
Yeah, that did happen.
Right. So I watched that. That's where I kind of was introduced to both of you. And so the more I did that, the more I'm interested in the world I became. Okay,
now at some point you decided to start a fund and you make 50 or so investments.
Right.
Correct me if I'm wrong.
We made 64 now.
64. So you're on that's a pretty fast pace, to be candid. I mean,
yeah.
If I were to rank the people who've been on this new podcast, Angel, the number who've done over 50, I'd say half have done over and half have done over. So you've done a lot. Right. You raised a very small fund. Mm-hmm. How did you go about raising a fund, being an outsider in the industry?
It took me almost 2 years to get the first LP to say yes. So it was just a lot of
2 years.
Yeah.
You're just grinding it out, meeting with people, saying, I'm starting a fund.
And most of that was remote. Most of that was not being in Silicon Valley, because I couldn't afford to. I couldn't afford to be hopping on a plane or anything. But it was a lot of phone calls, a lot of emails, a lot of outreach, building a deck little by little, learning from mistakes, going back out. I'd have to say that Brad Feld definitely helped with the early on.
Let me stop you for a second. How did you even get in touch with Brad Feld? Like, Brad Feld is one of the top, 25 investors of all time. So Brad Feld was of huge help to you. How did you get him to help you? How did you even get in touch with him?
I got in touch with people different ways. With Brad, I just cold emailed him. That wasn't...
Really?
Yeah, I just cold emailed him.
And he responded?
He did respond.
That's amazing.
Yeah. In other cases, like I kind of tracked people down, like Sam Altman. I first tracked down his brother on LinkedIn, Jack, and I asked Jack. I did the sort of sin of asking Jack to be introduced to his brother, which kind of sucks now that I think of it. But I did that. He said no. He said, of course, people want to be introduced. I said, well, can I show you what I'm working on? He said yes. 24 hours later, he said, here's Sam's number. He has to see this.
Yeah.
And this was 2012 to 2014, where it was just a lot of like sound bites and a lot of articles instead of like everybody is like understanding of it now. I think maybe.
What are you referring to?
The understanding that not everybody has a fair shake. In Silicon Valley or investment in general.
So, in one way, your hustle got you into all of these meetings, but in another way, the industry is biased and the numbers are terrible and bleak.
Correct.
How does one reconcile those two contradictory statements? One, the industry is, the numbers are so screwed up, but here, your massive hustle got you in.
Yeah.
And people would respond to your emails. So is it that enough people haven't tried to come in, or the industry now is so ashamed of their statistics that they're playing catch up? How does one reconcile those two contradictory?
It's a really great question, a really great way to put it, because I know how deeply you feel about almost a meritocracy, about like if you have enough hustle, you should be able to get there.
Yeah.
I will say that it took an embarrassingly long amount of time to be able to get that first yes, to be able to get anyone to take me seriously. So that's where the insult is.
Right.
The insult is someone, if you think about me starting at the same place that someone else starts, maybe they went to Stanford, maybe they're white male.
Yeah.
And if we started at the same place with the same amount of resources, I guarantee you I win. I just win.
Right.
And so the fact that I had to start from such a far back post, and I still got, that's a testament to like my tenacity, but it shouldn't have to be that way for everyone who is just, it shouldn't be easy, because if it were easy, like
everybody would do it.
Tom Hanks, everybody would be doing this, right?
Right, yeah.
But these barriers, some of these barriers are just insultingly
hard.
Yeah,
it shouldn't be that one person has to climb the mountain, the other person's got to climb the fence.
I shouldn't have to have created a scouting program from scratch.
Right.
From my blow up bed in Houston.
Right. With
nothing in the bank. I shouldn't have had to do all that just to be kind of considered okay enough to be in the room. Like you're okay to be in the room. Yeah. I think that's my opinion.
It is interesting because when I was writing the book that I just wrote, I was writing and you really woke my eyes up to this, because I was like, listen, I'm an outsider too. And my wife's like, yeah, but even though you're a kid from Brooklyn who had to force his way, brute force into the industry, which is kind of what I did too in your story, just hustled. I still was starting at second base, where you were probably starting from the dugout, right? Like, so as much as I feel like an outsider, my wife, when I was writing the book, was like, you feel like an outsider, but there's a whole nother group of outsiders who are further outside of you. You should kind of reflect on the book. And I actually rewrote a section in the book where it's like, as much as I felt like an outsider, there are other people who are even more outsiders. I think you fall into that category.
Yeah.
How do you feel you get taken as an investor by founders? So we know how you felt coming into the industry and trying to get LPs, but do founders treat you differently? Do you feel biased in that way, that like if you meet with a founder, or they just think she's got a checkbook, I need money? It's a pretty simple trade of equity for cash here.
Well, a lot of times I'm meeting founders now because of the mandate of our fund. That a lot of times I'm meeting founders who are themselves underestimated, and so the first reaction is that they're just happy to see me. I'm happy that this exists, whether it's me that did it or someone else that looks like me. They're happy to see that person across the table to get a fighting chance. And I'm talking about Black people, women, and LGBT people who from me, who didn't go to college, who who kind of, bootstrapped everything to the PhD. I mean, it's not like we're all down and out looking at that, but still those people have not really had someone to too many people to look at. There are a few. Absolutely. I'm not the only person, but it's too few.
It's embarrassingly small numbers.
Yeah.
And I know this because we have this challenge where we do events.
Yeah.
And we try to have a lot of balance in terms of color, in terms of gender. And it's just amazingly hard because we do so many events that we're inviting the same roster of people over. And they said, hey, listen, I would love to speak again, but I have work to do. I can't come out for every event.
I can't be because some people they feel like a token after some point.
Right.
Like, and that's not fair to them. I think when it comes to women, like CES is a good example. They couldn't find that many keynote speakers that are women. There's a ton now. That can't be an excuse for anyone. There's no excuse there. There's still just too few people of color and women of color.
But you were able to raise a fund and get an attorney to help you raise the fund. Tell me about that.
What part do you want to know about?
How many LPs did you pull together? How many meetings did it take to get somebody to commit? Who was the first person to commit?
Right. So we've had two funds, Fund 1 and Fund 2. They're both small, so they were just kind of extensions of each other because we wanted to kind of close out after it had been over a year.
Yep.
So over the two, there are 50 LPs on this small fund. So it's like several angels came together with a couple of larger funds to
50K checks, 25K checks, 50K checks.
Anywhere from 25 to 250K.
Got it.
It just depends on where I found them and who they are. The first person to commit was Susan Kimberlin, who was in both of our funds, and that was and
who is she?
She is she's now retired from Salesforce, but she is a product manager, and she helped build the search team at Salesforce, and she worked at PayPal before that, I believe.
So she's done phenomenally well for herself.
She's done really well for herself. I think we're around the same age. We're both in our 30s.
How did you wind up meeting her?
Actually, this is another connection that we have. Yeah. So I got into that first cohort of the 500 startups, VC Unlocked, that you spoke at. That I did not walk up to you to speak to you at because I was so angry with you.
Really?
Yeah.
Why were you angry with me? What did I do? Was just one of our Twitter battles?
Yeah, it was one of our. Actually at the time I think it was it was before our Twitter battle, but it was like.
I have such a short memory, I can't remember.
I know, because here's the thing. I think it doesn't affect you as much as it would have affected me, which in some ways I have to tip my hat to, because it's like you just do your thing and roll. But at the time, before we had our,
back and forth.
Yeah, before we had our moment where we understood each other. Right. You'd said something about something that I felt was not cool. And I was in the corner with my arms folded, and I said, I'm not going to get an autograph from him. And that'll teach him.
It's funny.
And I know that it really affected you that day, so I'm sorry. I didn't want to.
Oh. No, there's always an opportunity to learn. I think sometimes when you start to have more prominence in an industry, you forget the impact you could have on people who are coming up. Mm-hmm. And I've always tried to be more cognizant of that and be available to people and, kind of keep my organization flat and keep access to me kind of consistent. Yeah. Because you can sort of get disconnected from, the street, as it were, and where like the next big innovation is going to come from, because you're only as good as your last investment. And I know a lot of VC friends who are like, bring me stuff when it's a known slam dunk. They just have moved further downstream, and they just want to write $20 million checks when something's a sure bet. And I've purposely tried to stay upstream where it's, unclear if it's going to work or not, but that the returns can be bigger.
That's more fun too, right? I would imagine that's more fun. It may, does it help that you're like loaded? Like, do you feel like compared to being where you didn't know if things were going to shake out, do you feel like you can take more risks? You can afford more risks?
Yeah, when you have more money, it takes a lot of the. Yeah, I can take risks now that I couldn't take 5 years ago, and certainly couldn't take 10, 20 years ago. So yeah, that does take the reins off a bit, and you can just be like, you know what, I'm going to take a flyer here and see what happens. Sure.
And hopefully you don't swing back to the point where you also, because you have that, you don't have the fun of taking the risk. Like you don't enjoy the risk anymore.
It's very alluring to be a late stage VC because you make 1 or 2 investments a year, which means you have to meet with, if you meet with 25 companies or 50 companies to make one investment, you meet with 50 to 100 a year, which is pretty manageable. 2 a week, 1 a week. Yeah. These are very, well-known companies. So it's easy. And then what you and I do is we meet with 100 companies to invest in one. Yeah. And it's arduous and hard and painful, and most of them fail.
Why do you do it then?
When did this flip? All of a sudden you were interviewing me.
I'm very curious. It's okay.
Well, I think I don't play well with others, and I never want to sit in a room with 6 other dudes and debate whether I'm going to, write the check, which is typically what happens if you join one of these funds. And I really don't like hanging out with a bunch of MBAs or people like that when I'm making my decisions. Like, I'm my own counsel. I'm going to make my own decision, and I hit one unicorn every 25 investments, so why mess with my system, which is, I think my gut's pretty good. But it's alluring, sure. But it's interesting. To be honest, it's something I've always wondered. Like, why am I doing all this hard work when I could do the easy work and make probably more money and have an easier life?
I have a little theory.
You have a theory? Why is that?
Because you get to... The work is the work, but you also get to kind of impact people, right? You get to impact people in a better way than just sitting in some office and writing 1 check a year. You get to, because you meet those people, because you do the work, you get to... People can come up to you and say, look, you affected me in a positive way. You gave me the, the inspiration to do this.
That's why we do all the events and the founder universities and all this stuff, is because we know that when we have people come to those events, they tell us years later, I was at this event and you said this, or I heard this person speak and I got their card and then they became an LP in my fund or whatever it is. Those little things can have ripple effects in people's lives. So we like to do it that way. Yeah. So of these 64 investments to date, have any broken out yet?
No, not yet.
Not yet. So you're really early.
We're about 2.25 years into our very first, check. And it took about half a year to do our first 6 investments. So this year is where I think kind of rubber has to hit the road. We kind of have to, I think that we start to see some things happen this year, and we're excited about it.
Yeah, the first 4 years tend to be deploying the capital.
Absolutely.
And the next 6 harvesting the winners.
Yeah. And it is, I'll tell you this, it's honestly, our goalpost is moved. It's also, there is a microscope on what I'm doing and what Backstage is doing that is not on other funds, and me as a manager. Where's your exit? Where's your breakout? Where I interviewed someone who had a fund, white male, who had a fund, and he was in year 5 and had no exits, had a few markups, and was raising another like $40-50 million with ease. And had nothing before the fund to say that there was any reason for that. So you can probably get that. It's a little chip on my shoulder because of that's kind of not cool.
Yeah, they have to, back to the theme of it is a meritocracy, except you have to work 5 times or 10 times harder than everybody else.
Which is the opposite of a meritocracy. So it's not merit-based. Yeah. It's superhuman versus mediocre human-based in some cases.
But in fairness, you didn't go to Stanford or MIT, and I didn't either, or Harvard. Yeah. And most people are looking for that elite status from those schools to back funds.
They are.
In fairness, we are kind of like out of those LPs' typical signaling.
That's true. I think here's the difference, and you probably already know this, and I'm not trying to attack you, but the difference is with all of that, in addition to that, you don't have to worry about walking down the street and someone kicking your ass because of what gender you are or what race you are or what orientation you are.
Yeah, absolutely.
So that if you have to add that backpack on with the rocks in it every day, that's the difference.
Yeah, it's an underlying. I was explaining this to somebody, like, I'm full believer in white male privilege based upon how many times cops have let me go.
Yep.
Like, if I was a black male and speeding at the level I was speeding a couple of times when I got off, I would have been arrested.
Under the jail.
Yeah, I would have been across the hood of a car.
If you made it to the jail.
If I made it to the jail.
And that's where it becomes, it's less farcical and more like heartbreaking, because it's a matter of life and death in some cases. Yeah. And when it's not a matter of life and death, as we've seen now with the
proliferation of video cameras.
When it's not a matter of life and death, it's a matter of dignity.
Yeah.
I think it comes down to that. It's a matter of, I just spoke at a big event, and as I was trying to make my way to the stage, I was told I couldn't go into the green room because they thought that I wasn't supposed to be there. I was not allowed
Speakers
to be
only.
there. Yeah, I was not allowed to be there, let alone, speaker, but let alone having a badge. You didn't even pay for a ticket for this place. You couldn't have,
Meanwhile, you're a speaker.
Meanwhile, I'm a speaker and doing quite well in that event. And there's dignity loss. There's a gut punch when that happens that, that has to be thought of. It's extra. We don't want to have to think about it. It's not something that we get up like, what injustice do I get to face today?
All right, when we get back from this quick break, I want to ask you about how you do work through all that and yet keep succeeding on Angel, the podcast. Hey, everybody. Let me take a moment to thank NetSuite from Oracle. Yes, the results are in. If you look at Survey Inc.'s 5,000 companies, the top 5,000 companies, the top 5 barriers to growth for those companies were: 1, it takes finance way too long to close the books. I experience this all the time. 2, our company is too slow to launch new products. We got a bottleneck. Number 3, hiring and keeping good people. This is critical for all companies. You know that. 4, managing your cash. You need to have cash in the bank, right? You don't want to run out. And 5, too many disconnected systems, making it hard for you to get a full picture of your business. Now, it sounds like these businesses have outgrown their business and financial management systems. You know that you use spreadsheets and QuickBooks and all these other systems, and they're fine at the start. I get it. You're saving money and you don't really know what you're doing. Well, it takes twice as long to get simple things done, sometimes 10 times as long, and it's not going to be accurate. And you need those accurate answers to make decisions for your business. And that's where NetSuite comes in. They are the #1 system for growing your company. It's the one system that tracks and manages revenue, cash flow, HR, inventory, projects, and even e-commerce. And for every single industry. It doesn't matter if you're in software, hardware, a marketplace, B2B, B2C, B2B2C. Does not matter. NetSuite's going to work great for you, and you can run your entire business from your dashboard on your desktop or even on your mobile phone. And that's why thousands of companies use NetSuite. It's the only system that you need to run your business. So here's your call to action, everybody. Go to netsuite.com/angel. Please go to netsuite.com/angel and get your free guide, Crushing the 5 Barriers to Growth. That's right. We talked about those 5 barriers earlier, and you're going to be able to crush those 5 barriers. Doing the books, HR, launching new products, managing cash, and all the disparate systems you use to try to figure out what's going on. You're going to go crush those 5 barriers to growth at netsuite.com/angel. Please go there, netsuite.com/angel, and get that free guide. It's the only system you're going to need to run your business. Let's all say thank you to NetSuite from Oracle for supporting independent media like Angel and for supporting season 2 of this amazing podcast. We've had so many great guests on, and it's all because we have NetSuite support. So just from me to you, NetSuite team, thank you. And on behalf of the audience, thank you. Okay, let's get back to this amazing conversation. Hey, everybody. Welcome back to Angel, the podcast. You can visit us at angelpodcast.com, and you can get us on all the major services. Hey, thanks to Spotify for hosting us as well. If you like the show, rate it and write a great review. If you hate the show, we're about 23 minutes into this thing, so obviously you don't hate it. You kind of like it. So you should probably give it 5 stars and write a review anyway. If you haven't read the book yet, angelthebook.com, go ahead and read the book. And same drill, go ahead and write a review. It means a lot if you do stuff like that. It's a good signal for the algorithms and our algorithmic overlords. So my guest today, Arlan Hamilton, is the founder of Backstage Capital. You can visit their website, backstagecapital.com. How do you make a decision to invest in a company? You have a criteria. You're a theme-based portfolio. Mm-hmm. What is the theme of the portfolio then?
Well, I would
or the
say
criteria.
Yeah, so the criteria is very simple. That one co-founder, at least one co-founder, needs to be a woman, a person of color, or LGBT. That's kind of where
any of those 3 things.
Any of those 3 things. One co-founder. We used to say like any sort of C-suite person, but then they would leave, and that didn't make sense. So it needs to be someone
so you could have 2 white dudes who had a director of marketing who happened to be female.
We wouldn't just we have a ton of deal flow, so we don't just look and say, oh, there's a black person there, that'll work. But in some cases, we thought it would make sense because they were really into it. But if you don't have a significant amount of equity, in any case, it's probably a bad idea to base it on that. So someone who has 5% versus 50, black woman, you have to ask yourself, why do they have that? Yeah.
So there's another issue.
That's another issue. Why?
You dig into the cap table. And
Do they have enough skin in the game? Are they respected? Do they know that they're not being respected if they're not? Those things kind of go through my mind.
So what I read from that is there might be a little bit of window dressing going on in the industry or facading.
In some cases, yeah. I mean, you see it sometimes when you see like applications for pitch competitions or like for prizes and stuff, and it's like it's based on having a woman on the team,
right? And
then it's like you might as well have a dude dressed in a like dressed up. I mean, it's just like some people will do anything to
qualify.
Yeah, they'll go hire someone on the spot and it's part time, and they just put him front and center in the picture or something like that. It's
a little window dressing.
Yeah, which is
try to skirt by
a whole
whole
other story.
So female, LGBTQ, and person of color is the requirement.
Or yes.
Yeah.
Any of those things.
Right. And any vertical specific enterprise computing?
Not yet. I think we're moving towards that though.
Why?
Think just because of time, because of experience. I said very early, I'm not going to pretend I have some expertise anywhere. It's going to be an agnostic and a generalist fund. Right. And just the idea of going out and having those things, those first things as part of the criteria is going to be groundbreaking. So I can focus on that, and I get to see really great things. I think now that I've had the luxury of seeing thousands of companies with that mandate and investing in 64 of them, and with a lot more on the way, now it's starting to be, okay, I think I can help more in this direction, or maybe I can, after we do our first 100, maybe we will do something over here. I think blockchain is probably going to be something that we focus on. We've already been talking to someone about maybe doing a blockchain fund, but
so focusing on the crypto blockchain space, or maybe putting the fund on the blockchain.
No, focusing on the space is the first step.
Got it.
In that, yeah, that's just an idea that we have.
Yeah, and so what did you learn from the first 64 investments? If there's something you could tell yourself going back in time, what would you tell yourself?
It's kind of a boring learning because I've learned so much. I learn every day so many things. But like if you're talking about just as an investor trying to learn something, I learned that you should be really disciplined and careful with the amount of money you put into each company if you're going to have a portfolio. So be, like you say, invest in 20, 30 companies a year. That's kind of like your theme there, their thesis. So early on, without knowing how much money I would end up raising, I would do a 100K investment and a 20K investment within the same time period.
Right.
And in some cases it makes sense. You feel like you're going to have more, you're going to do this, but like it really does help you. And it helps you too when you're dealing with a lot of people. Like if you become known for being an angel investor, then people are going to come to you, a lot of people that you already know and people that are introduced to you. So if you have a discipline in the amount, it really helps you too.
Yeah.
It helps you to not get the heartstrings pulled. Because you're like, I don't go over 25. I don't go over 50. And then
these are just the parameters of what we do.
Exactly. I think that is helpful. And it helps you kind of, if you're starting from scratch, like if you picked up your angel book and you're like, okay, where do I start? Do you then just go willy-nilly and just say, okay, I'm going to put 100 here, I'm going to put 5 over here, 10 over there?
No, I mean, how would you ever know? There's no discipline there. There's no bankroll management.
It helps you in the long run, looking back on the portfolio.
And you had no mentoring in this. There's no mentor. The streets.
Hard knocks. No, I did have mentoring. I had mentoring that they just didn't know they were mentoring me. I had the people that I was watching, online. I had the professors,
But it's not like you worked at a firm for 2 years and watched them do it as an associate.
No. I pitched the idea of being an apprentice to several VCs. And the ones who would respond said no. The ones who didn't respond, they said no to,
Yeah.
in their own
way. I mean, in my experience, those jobs tend to go to people who went to Stanford or MIT.
Yeah, they're buddies.
Or
Like they
Harvard.
wanna hang after. They wanna have that thing. And now we're learning that they also want someone who can turn a blind eye. No shade.
Maybe. Yeah. It's dark.
In some cases, I'm not saying this is everyone, but it's true. If you think about it now, like maybe the reason these guys don't want a bunch of women analysts who can become partners is because they can't get up to bad things if they have too many girls in the treehouse.
It's possible.
I think it's more possible than not.
You think it's probable?
Yes.
Possible, probable, yeah. I don't know. I never. It's a big misconception that people think I'm a venture capitalist when in fact I'm an angel. Like I actually have never been part of a big firm, even though I was associated with Sequoia. I was a scout, which means I'm not working out of their office. I'm just going out and scouting deals. It's a slightly different thing. So how do you look at follow-on? You have a small fund. Mm-hmm. Do you follow on or not?
We want to, but we just can't. Like we don't have the ability to because of the amount of money that we currently have under management. We're working on that though. That is like the step of this year. We've started talking to institutionals about that.
What about just having an AngelList syndicate like so many others have done before you?
This is where things turned ugly last time.
Yeah. Well, yeah, you were on stage. For people who don't know, you were on stage and you had some
choice words.
Candid feedback on the AngelList syndicate program. How do you feel about it today? This was a couple of months ago.
It's funny that you asked, Jason. Yeah. AngelList.
Yeah.
Good for some people, not so good for others.
Okay.
I am others.
Got it. And by others, do you mean women, people of color?
Oh man, I don't know. I don't know. I can't tell you what they're thinking. I don't know if they're just. Where can I go with this? Can I?
Well, I'll tell you what I think their signaling is. You should be as candid as you want to be. I will tell you their signaling because I was at the first AngelList syndicate. I'm no longer there now. I do it at Jason Syndicate on my own. There's no reason to share the.
High five! Are you taking on it? You can share some of my charity.
Just on an economic basis to give a percentage to the platform when you don't need it.
So you do it on your own site?
We do it at Jason Syndicate, not now.
Oh, good for you! That's what we're gonna do.
20 deals.
Done.
Yeah, I can introduce you to the person who does the back end for a lot of people.
100%.
But the back end is pretty easy to set up, I think. And
I mean, we have funds. we have lawyers and accountants and
so it's not tremendously difficult. But I do think that their thesis is to hire former founders who have connections with other founders. So this goes back to the, people like me kind of problem we have here in Silicon Valley. And I think that's pretty well established. So it's not necessarily women or male or color or white. I think it really has to do with, did you work at a company and did you learn growth techniques and do you have something that's attractive to founders, right? And that's their thesis. I don't want to speak for them. They can speak for themselves. But in my experience, they've always been looking for founders. And I think they've said this pretty much up front. We want to enable founders to become investors because founders are the best investors. You're not a founder.
I know a lot of Black women who are founders. I don't see them on AngelList.
Really?
I don't see them invited.
Have they tried or?
Yeah.
Okay, so
I'm not going to speak for them. I'm not going to start that. Oh, okay.
Because I don't think
speak for myself here. But
just right off the top of my head, I don't know. The only female AngelList syndicate I know of is Cyan Bannister. I'm not sure if I know of any other female ones, but I'm not.
I have one. I have 150,000 backing.
Oh, so you do?
Yeah.
Yeah. Do you use it ever? Has it worked?
I tried.
Didn't work.
I tried, Jason. I tried for 3 years. There's just so much friction with them. There's so much friction.
What do you mean by friction?
Oh, I don't even know where to start. It's like an entire episode.
Really?
Yeah, it's kind of negative. I don't know if we want to just spend our time bashing AngelList. I plan on.
They are the lead candidate, and if there's a problem over there,
I like your idea of just doing it yourself. Like that's my MO. So why don't we just do it ourselves? I've gone through different people there. I've tried different things. I've been promised different things. Very recently, I tried again. It was looking good. Buried the hatchet. There's a couple people that I really like, and I think they're cool people.
Yeah.
But man, they really screwed me over.
Really?
Yeah. Yeah, in a big way. That doesn't
because they just announced, coincidentally, at the time of the taping of this, which I think it's the 9th of January, and we'll probably release this in a week or two. But today they released that they're doing a $35 million fund or something, and they're going to have an angel incubator, a way to train angels to go and flourish. It seemed you'd be perfect for that. Did you try to do that?
I agree.
Yeah.
I think that sounds just like something I should be part of.
Yeah, well, if you did 64 investments, with your own hustle.
Yeah, it kind of takes the place of having been a founder, right? I've started my...
Yeah, I would say now you have credibility.
Yeah, exactly. It's kind of like when you say college or similar, or whatever the phrase is.
Yeah,
like,
college or similar experience.
Yeah, exactly.
Related experience.
Related. So that's kind of how I feel there with that mandate.
Yeah.
I think we were working on something else. I'm going to dial it down a little bit because I don't... I don't know where the future...
Have you talked to Naval, or is he just not open to talking?
Oh, I've never talked to Naval.
Oh, okay.
Naval might be the coolest kid on the block. I have never talked to him before.
Huh, that's interesting. You guys should have coffee.
We should definitely have coffee.
Because life is... I know him to be a very enlightened, hardworking, just person in my experience. And so it's, to me, I have cognitive dissonance thinking that they wouldn't embrace you and what you've accomplished. And I think it would be some huge mistake for them not to back you, given the fact that you've proven through your hustle that you can manifest a fund with every hurdle put in front of you and deploy 64 investments as an outsider.
Right.
I mean, that does have to count for something.
Right.
But
I agree. Well,
yeah.
Maybe Big Brother Jason can walk me into Naval's office and we can have a chat.
Well,
I would love to chat.
I mean, I
with
could
him.
definitely send him the. What I'll do is I'll send him this part of the conversation. Just say, hey, I think this is probably an opportunity for you to do better as an organization.
Yeah, and to be honest with you, it might be something where we can have a conversation. I can chat with them and try to help them move forward. I feel so burned by them.
Do you feel you get held to a higher standard? I'm known as a difficult person.
Ooh, that's fun.
For sure. It's kind of my brand to be a difficult guy. You had a radio crew with you here, and I was like, turn your microphones off. I'm not part of the show. And I admonish them and, dismiss them. It's part of my shtick.
Yeah.
It's just shtick, guys. But you're also a little bit difficult and challenging of people. Do people put you into that bucket and say, oh, she's too challenging, not collaborative enough?
Yeah, they may.
I got that a lot in my career.
Yeah, they may. What I try to do, and I think if you talk to a lot of our founders, you talk to a lot of people that we've partnered with, I hope that what they say is that maybe I'm brash and maybe I tell it like it is, but I hope they tell you that I'm kind. I try not to be a bully. I think that if you are someone who is not used to being around outspoken women or black folk or whatever, however you want to put it, and you also see me by tweets, you see me by snapshots of life, I could come across as this kind of sassy person to you because you already have in your arsenal of description for a black woman sassy, right? I think that I can fit that mold for people. They would absolutely need to take a day or two to learn more about me, and I think they would find someone who thinks through things, is very caring and thoughtful about other people. And I don't try to be difficult for the sake of being difficult. I don't try to be difficult at all. I try to be, like you said, I forgot, you started your own syndicate. Why shouldn't I have a first class seat? Why shouldn't I get the best table? Why shouldn't I speak up for myself when I feel like someone is putting me down? Why shouldn't I?
It's gotten you this far.
Yeah, and it'll continue. I can sleep at night because I know I stood up for myself and I stood up for others. I stand up for others more than I ever, say about myself.
The same behavior can be interpreted as courageous, as cantankerous or brash.
Right.
And so...
And sometimes I am. Sometimes I'm a little much when it comes, when I'm really, really upset about something. Yeah. I'll go off, right?
When I see people like that, I'm just like, that's an interesting person I should spend more time with. No, I was telling, I told somebody, the more difficult a founder is, there's sometimes people who are difficult for the sake of being difficult, and then there are people who are difficult because they have principles or ideas of how they want this to go, and they've got a vision in their mind. And so as an investor, you can be very tolerant of that. Now, if they're being difficult for the for no reason. And you're
life's too short for that.
Yeah. You're like, well, why do you need to change these terms in our deal? And they're like, because that's the way I want it to be, and I have other offers. It's like, okay, I'm not sure if that's a great reason, but if they say, well, my last company, I got burned because I gave up too much control, and now with this company, I've made a little bit of money, I'm putting my own skin in the game, and I want to maintain more control, and as part of that, I'm investing $250,000 of my own dollars, and I feel like I've earned that.
Yeah.
You're like, okay, sounds reasonable, right? So
I mean, and I like to watch how founders treat other people, treat people that they think have less power than them. That's a really good thing. Like, I'm not into hanging out with jerks. That's not fun. I mean, except for these guys.
She's pointing to the poor radio people that I'm giving
actually, this is all my crew and one person from radio. So it's like these lovely people.
Yes,
who I get to work with.
You roll deep. They told me you're rolling deep. I was like, I need to roll with a radio posse. You're getting profiled by another podcast.
Yes.
So that's great. So people are finding out about you. That's good.
Yeah, people.
You're using the media to get your message out.
I'm just being me, and the media is coming to me.
It's good.
Yeah.
I think it's a smart move. I think at some point there's going to be some brave LP who says, you know what? If she can hustle her way to 64 deals and her own microfund, and she didn't go to college, she's from Texas, she never worked in this industry, she just pushed her way in. At some point, somebody's just going to go like, yeah, that's just too much raw talent. How old are you now?
37.
37, okay.
Yeah,
I thought you were younger for some reason.
Yeah,
you look a lot younger.
it's the baby face.
It's the baby. But even 37, to do what you've done.
And I am young. I don't know why you said you thought I was. I still am.
Well, I'm 47. I guess you're young to me. But I got the sense you were like 27.
20-something, that would have been a better story, yes.
Yeah.
I am 37.
But you made a horizontal, you just made a total career shift into this with no previous experience.
Yeah.
That's what's most impressive to me. Because I get a lot of people like, hey, how do I angel invest? How do I do this? And you just did it.
Right.
Tell me about a couple of portfolio companies you're proud of.
So out of 64, I'm proud of all of them. I'm trying to think about what makes sense. You guys can edit this if I ask for help. Like, who should I talk about?
Well, just pick one that just comes to mind as one you met with recently or one of the early ones. Just be random. But company you said, wow, that sounds like an interesting possibility there.
Yeah. I know you're going to say that. So I can't. So the thing is, like, I don't know if I can do justice to them, but Mommy is one out of Los Angeles. That is like Mommy, MAHMEE. That is run by a mother-daughter team, and they work in healthcare for mothers, which I think is really great. Something like I don't know if we can talk about some of them. So like something like Akash, they use diamond technology to. It's really over my head, but they use diamond technology to beam Wi-Fi from space. That's all. Wow. That's all I can tell you. It's something that Mark Zuckerberg would probably think is really cool.
But low Earth orbit satellites are going to be a big.
There we go.
Yeah.
GAN stuff. Just different things. I just these little buzzwords I don't know much about. I'm the Simon Cowell in the group. I find the talent and figure it out later.
So. How do you know if you're going to be successful with these first 64 investments? Is there a goal, follow-on fundings, markups?
Yeah, exits? Both. Follow-on funding, I think, is a necessity. Like that's just something that because of our small checks and because a lot of companies have raised more, obviously, but I want more ownership in these companies. I don't want to just stop at
1%.
Yeah, that's not fun to me. So I think there's a lot that's being left on the table. So follow-on funding that they raise, which they're doing, and a lot of the way that we measure it now because it's so early is like their individual growth, and a lot of the companies are just like users, revenue, the different traction that we can.
Key metrics.
Yeah.
What do you look for in a founding team?
So
after 64 investments.
Yeah, it's the same thing I looked for the first time. It's like I look for me across the table. And this is going to be weird. This has to do with this. My mom sent me a text like a month ago, and she said, "I just listened to your podcast with Jason. Yeah. You guys are." She didn't say switched at birth, but like we were from the same. We were like.
I kind of feel that way.
Yeah, that's what she said. It was, and she doesn't know anything about our relationship at all, like what we've talked about. She just knows you're this guy that was on our podcast, and she listened. And I just thought that was so interesting because I think that she sees what you see, which is like you you weren't handed something. I feel like I wasn't handed something.
Certainly.
I look across the table at someone and I say, I like to say this: Are they hungry and not thirsty? Right? Are they willing to do what they need to do for the company without being reckless?
Right.
Is there something special that kind of changes the energy in a room about them? And I think kindness is really important. It's undervalued. Like kindness it can go a long way. And I guess I'm getting into like everybody else's territory here, but like EQ, like high EQ is important.
Sure.
And if you can recognize it, hopefully you recognize it, you're recognizing it. I feel like I do. That's important because, there's a lot of ups and downs in startup life, and someone who's like that resilience in someone is really important.
Yeah. If you're hungry, resilient, you have a high EQ, when things are going badly, you have a much greater chance of continuing work and getting through it.
Weathering that storm.
Yeah. And it's
so
literally going to be storm after storm after storm. People think like at some point the storms end. No, they just get bigger and different.
Yeah, you have bigger problems.
Yeah, and they're different problems, but they're bigger typically. Like if you look at Tesla and Uber and some of these big breakouts, like they've got huge existential challenges they have to face. Production issues and regulation. Airbnb regulators are getting kind of upset about them. And
was it you that said this? Like, there's no shame in like being the first employee in a company. I kind of feel like that's the gig right there, being like the first 10 employees in a company where you're not the co-founder, because you get to be part of something really magical. Affect change, but then get to sleep.
It's like sleep. I call it being a founding team member. Okay. Like it's pretty great because you get a lot of risk taken out. You didn't have to start the company. And you're going to learn a lot, but you'll sleep at night because you don't have to wear the crown. Yeah. And all the arrows aren't pointed at you.
Yeah, there's I think that's underrated too.
Yeah. So what's next for you? Raising the next fund?
Yes, we are. So we're raising the next fund. I guess that's all we can say about that because we can't really talk about that. We can't solicit that. But we are, Christy, can I talk about studio? Yes. We're launching Backstage Studio, where we will be
an incubator of sorts?
Of sorts, yeah. If you think of BetaWorks and Science and Pioneer Square Labs, with a little added portion to it where we'll be able to really engage with our portfolio and our deal flow in a really fun way that we can share with others.
Amazing. Yeah, deal flow, proprietary deal flow is kind of the name of the game in my mind. And if you can build proprietary deal flow, which if you're going to go after underrepresented founders, it's the definition of proprietary deal flow because they're not getting the meetings that other people are getting.
Exactly.
So you're going to get them earlier. The earlier you get them, the more flame outs they'll be, or their earlier stage. But you can have a greater impact on them as well.
Right. And we're willing to be there during that nurturing time where we can help other companies and other investors and organizations kind of meet them a little further along, kind of the same idea of having a scout program, which is, Sequoia is not going to want to dig through 1,000 companies to find 10 cool ones, right? But they can have the scout program, and that kind of works. So I think what I've done is created my own scout program from scratch.
I think it's a wise move. So you'll look for people to help you find deals in this model, or you'll just use your co-working space?
No. We have a team of 7 now. We'll grow to about 15 in the next month or so. And that will be out of studio. And so we'll have different things going. We'll
mentors.
Yeah, I mean, so we'll have the different roles of a startup within ours. Studio is a startup in itself.
Got it.
And we'll be able to build our own products, looking at our portfolio, looking at pain points that all of our portfolio share.
Got it.
So something that can be beta tested within our portfolio and then maybe kicked out into the real world.
It's very science-esque. I think they had like ad buying as like their big. They were very good at ad buying, and so they would put that against people's products that they were
right. And BetaWorks is
mentoring.
Good with the consumer kind of
I think
mobile, I should say.
Yeah. All right. Well, listen, this has been a great hour and continued success. I hope that some great LP anoints you and gets you a big, huge check.
I can't say that. I am not saying that. SEC regulations.
Yeah. No, I'm saying I hope
have
for you.
forbidden me.
I hope for you that you get like some huge LP that anoints you. It's helpful if you get that anointing. Like I think Sequoia in a way validated me as an angel investor, and I did my first 22 investments with them.
Yeah.
I think you're in that perfect pole position here because you've already,
Thank you.
through sheer will of force.
They gave you the chips to get into the game, right?
I had some chips, to be honest. I just wasn't in the game because I was too busy for it, and so they gave me chips, so it was sort of like a free roll. They're like, here.
So someone needs to give Backstage a free roll.
Yeah, free roll. It's a term in poker. Like if somebody were to buy you into a poker tournament, you would be free rolling. Because if you lost, it didn't matter. Because if you lose, you didn't pay for the entry fee. That's a kind of, and in a way, venture capital and funds are a free roll because you don't lose any money if you lose all the money, and you get upside if you make money. So you're free rolling. You can sleep at night. Now, if your fund doesn't go well, the chances of you raising another fund are greatly decreased. Yeah. But because, as one person explained to me, it takes 10 years, most people who are LPs will invest in 2 or 3 funds before giving up.
True.
Because they anticipate it takes 2 or 3 funds for a fund manager to kind of get their legs under them.
True.
So I think that you're in that kind of position.
And if you ever did want to be a fund manager with LPs, I would if I were you, I'd go directly to institutional.
Directly to institutional.
Yeah, go to someone like an endowment that has 20, 30 years to sit with you.
Yeah, I mean, they are the hardest money, but they are the most loyal money because they'll sit with you through 5, 6, 7 funds from what I understand. All right. Listen, Arlan, it's a pleasure to get to know you, and I wish you great success.
You too. Thank you.
You're fighting the good fight.
Thank you.
Some days you win, some days you lose, but you're resilient. And sometimes you get bad news. You get dealt bad cards 4 or 5 times in a row, and then you get pocket aces. That's the nature of this. Trust me, nobody wanted to like me. And then I did the Uber investment, I did Thumbtack.
Yeah.
Now everybody wants to have lunch with me.
Right.
It only takes one, and then all of a sudden you're like a genius, and they want you to write books. But nobody's asked me to write a book before Uber.
Yeah.
And, that investment or Thumbtack or any of the other unicorns. So you're basically as good as your last investment, which is why it's important to keep making investments. So I wish you continued success.
Thank you.
Thanks again for tuning in, everybody. Again, it's angelpodcast.com, and you can find us on all the major services. And angel.university is coming up. If you want to learn how to be an angel investor, go to angel.university. And our syndicate is jasonssyndicate.com. We're accepting non-accredited and accredited investors. We're currently only doing accredited investors at Jason Syndicate, but that could change if we figure out how to do the non-accredited stuff with some of our partners. So check that out. And of course, read the book, angelthebook.com. You get a kick out of it. Or listen to the audiobook because I read it if you like the sound of my voice. You don't find it.
I listened to the Audible, and that was my favorite.
Thank you. Thank you for saying that.
It's true.
So it's actually interesting. I think if you're a podcaster, more people will buy your audiobook than the actual book. So the Audible book is outpacing the Kindle, the ebook format, and the print format. So there's something interesting there about podcasters. Yeah. The podcasting's getting big. This podcasting thing could be big. All right. We'll see you all next time. Bye-bye.